Central banks are the most powerful institutions you were never encouraged to question. They rarely appear in headlines, they don't run for office, and most people can't clearly describe what they actually do. Yet they decide the value of your money, steer the direction of your economy, and influence the worth of everything you've earned. With a few keystrokes, they can create wealth out of nothing, or wipe it out overnight. And the strange part? They don't really answer to the public. This is the story of how central banks rose to dominate modern finance, not as neutral referees, but as players who helped design the game itself. A story of hidden authority, financial engineering, and the illusion of stability. And once you understand where it all began, your view of your paycheck, your debts, and your savings will never be the same. We begin in 1694. England was nearly bankrupt. After a costly war with France, the treasury was drained. A group of wealthy merchants made an offer to the government. We'll lend you £1.2 million if you allow us to create a bank. In return, this new institution would have the exclusive right to issue paper money backed by government debt. And so, the Bank of England came into existence. But it wasn't a bank as we think of one today. It didn't serve ordinary citizens. Its purpose was to finance the government and profit from that privilege. That was the birth of the modern central bank, not as a stabilizer, but as a lender to the state. Over time, this power grew. By the 19th century, many European countries had adopted similar models, privately owned institutions with special privileges. They issued currency, controlled reserves, and bailed out governments in times of crisis. In return, they gained enormous influence, often without democratic oversight. America's path was far more turbulent. The public deeply distrusted concentrated financial power. The first and second banks of the United States were shut down after political fights tied to corruption and elitism. For much of the 1800s, the U.S. had no central bank, resulting in a chaotic financial system filled with private currencies, speculative bubbles, and frequent panics. Then came the panic of 1907, a crisis so severe that J.P. Morgan had to personally coordinate a rescue. After that disaster, pressure built for reform. In 1913, Congress passed the Federal Reserve Act, creating the Federal Reserve System. It was marketed as a decentralized network of regional banks meant to stabilize the economy. In reality, it became a central authority with vast control over interest rates, credit, and the money supply. And here's where the story grows more complicated. The Federal Reserve is not fully a government agency, nor fully a private entity. Its board members are appointed by the president, but its member banks are privately owned. It's financed not by taxes, but by interest on government securities and fees charged to banks. It operates behind the scenes of financial markets, making decisions that shape millions of lives, without being directly accountable to voters. So who does it serve? Officially, the Fed has a dual mandate: maximum employment and stable prices. Unofficially, its policies often favor the same institutions it's supposed to oversee. We saw this clearly in 2008. The Fed didn't merely lower interest rates. It created trillions of dollars, rescued giant financial firms, propped up asset markets, and guaranteed toxic debt. In 2020, it repeated the playbook, buying corporate bonds, pumping liquidity into markets, and inflating asset prices that overwhelmingly benefited the wealthy, while everyone else was told to wait for the recovery. Here's the deeper truth. Central banks don't just influence the economy, they shape its very structure. They determine winners and losers. When they cut rates, markets soar. When they tighten, markets collapse. When they expand the money supply, asset holders get richer. When rates rise, the working class pays the price through higher mortgages, credit card interest, and loan costs. Despite claims of independence, central banks are tied closely to the financial system they supervise. Leaders move in and out of major banks. Their decisions often align with Wall Street's interests, and their language, technical, academic, deliberately vague, keeps the public at a distance. Today, central banks wield unprecedented power, with minimal accountability. The Federal Reserve, the European Central Bank, the Bank of Japan, the Bank of England. These are not bystanders. They are the architects of our monetary world. And since 2008, they've transformed the global economy. Low interest rates became standard. Quantitative easing, once considered extreme, became routine. Trillions were created to buy government debt, corporate bonds, and mortgage-backed securities. The result? Asset prices exploded. Stocks, real estate, commodities. For those who owned assets, it was a golden decade. For everyone else, it was inflation disguised as growth. Housing became unaffordable. Stock markets rose far faster than wages. The cost of living increased while savings accounts earned nothing. Most people didn't understand why. They blamed politicians, immigrants, or bad luck, not the invisible force managing the money supply. Here's the uncomfortable truth. The modern financial system isn't built to set you free. It's designed to keep you spending, borrowing, and dependent. Central banks lubricate that machine. They reward debt, punish saving, manipulate rates, control the narrative, and move unimaginable sums with the push of a button, all under the banner of stability. But this stability is not meant for you. It's meant for the system. Look at 2020. Markets crashed at record speed. Within weeks, the Fed unleashed more than $3 trillion in liquidity. Stocks recovered. Billionaires saw their wealth multiply. Meanwhile, millions of workers lost their jobs. Small businesses disappeared. Renters faced eviction. What was rescued wasn't the economy. It was the illusion of strength. Debt grew. Dependence deepened. And this matters because when central banks distort the price of money, they distort everything. Savings, investment, retirement plans, business decisions. All of it becomes warped. Bubbles form. Crashes follow. True wealth becomes harder to secure. Worse yet, most people don't realize they're affected. The interest on your student loan, your mortgage rate, the price of your home, the return on your savings, all of it traces back to decisions made in rooms you'll never enter, by people you'll never vote for. So who controls central banks? Publicly, they are independent. In practice, they serve the system that created them, the banks, the markets, the entrenched financial elite. The revolving door between Wall Street and central banking is not a conspiracy. It's a career ladder. And the complex specialized language of central banking serves one purpose: to keep outsiders out. But now you're no longer an outsider. Once you understand how the system works and how central banks maintain it, you can begin to step outside its traps. Financial literacy isn't about budgeting or picking stocks. It's about power. It's about realizing that money is not neutral. Inflation isn't random. Interest rates are political. Freedom requires understanding the system and learning how to move beyond its limitations. That might mean holding assets that can't be printed, building income streams that don't rely on debt cycles, rejecting the idea that endless growth is the only path to prosperity. Because growth driven by consumption and debt is a treadmill. The faster it spins, the harder it becomes to step off. So what can you do? Start by seeing clearly. Central banks are not gods. They're participants. They're tools, interest rates, liquidity injections, asset purchases, are not designed with your freedom in mind. They exist to protect markets, institutions, and a fragile debt-dependent system. You can't fight that system directly, but you can build a life that doesn't depend on it. Diversify, simplify, reduce debt, own tangible value, learn how money works, teach others, question the narratives, because when the next crisis arrives, and it will, the central bank will protect the system. Protecting yourself is your responsibility. History doesn't repeat, but if you don't understand it, it will break you just the same. Please subscribe and support me to keep this kind of content coming. Goodbye.